Well, we've set the tone for the rest of this morning's event, setting out the stall of the major banks there. Corporate banking mentioned, transaction banking mentioned. Let's focus now on NextGen Transaction Banking. Our second panel of the morning is hosted by my colleague V. Ramkumar, Senior Partner at Cedar. So Ram, if you would like to come up on stage and take charge of the event.
Thank you, Robin. Thank you. Good morning, ladies and gentlemen. It's going to be difficult to fill the shoes after that very interesting and impactful panel. But we do have an interesting topic to discuss next on this panel. We will be talking about NextGen Transaction Banking, the digital value chain from SMEs to corporates. Please put your hands together to welcome our panelists. My first panelist is the country head transaction banking, government, multinational and international business at Yes Bank, Ajay Rajan. Ajay. My second panelist for the day is the President, Small Medium Enterprises at Kotak Bank. Put your hands together to welcome Shekhar Bhandari. My next panelist for the day is a veteran transaction banker. He heads the transaction banking for ANZ Banking Group in India, Ayalur Vasudevan. Vasu. And my last panelist, but someone who's going to be, whose views are going to be very interesting from a technology standpoint, is Hari Padmanabhan, Chairman at UNCIA. Hari. Thank you, gentlemen, for joining us today. And as we spoke earlier, and as the first panel talked about, we are in an era where how banking was 10 years back is not how it is going to be 10 years from now, or it is already not what it was 10 years back. And here we are actually talking about a different facet of how digital has made an impact in quote-unquote, not just from a customer standpoint, but also from an institutional standpoint, not as individuals, but as institutions, and that's the topic on transaction banking. And I'm going to start the discussion with you, Ajay, and this is obviously something that I know you're very passionate about. If one looks at transaction banking has been there in its own shape and form, as they say, since banking started in its own shape and form. But digital transaction banking, as we call today, has actually made a significant change to the way things are done in the last, should I say, 5 years. So if I may ask you, from what you see, what changes have you literally been going through in the last 5 to 6 years, and more importantly, what do you think has been key to this growth?
So let me correct you first. Transaction banking has been, in my view, has been there since civilization started.
Since civilization started.
Okay,
since sliced bread was actually maybe later.
Let me tell you why I say that. So, see, it all depends on how you define transaction banking, right? So, whenever businesses are there, right, and we spoke about it earlier as well. Businesses, whether it is manufacturing, services, they're all in the business of buying and selling, right? It could be a product, it could be a service, but essentially there is a trade, there is a buy-sell. And when there is a buy-sell, you need to manage your receivables and manage your payables. So someone or a financial institution helping you manage those receivables and payables is effectively what is transaction banking. Right? And that is where banks add value to their customers and hence become very strategic, right? In my view, the value of transaction banking is not transactional as the nature is, but it is far more strategic because it actually helps them manage the core of their business, right? It helps create working capital efficiencies, right? Financial efficiencies, operational efficiencies for the companies to not only survive but also thrive. So that, leads to me saying that it's a far longer surviving business than we claim it to be. Second, I think 10 years, change in 10 years, I think is far too long, for the nature of this business. I think this business has evolved. I think probably every year we've seen evolution in this business, the way the business is done, both from a customer perspective as well as from a bank perspective, I think has seen a very seismic shift in, this business, right? For banks, I already told you why it is important for customers, but it's also extremely important for banks, more so after what happened in Lehman in 2008, because banks were then being valued in terms of the granularity of the business, the sustainability of the business, and that's the revenue which transaction banking brings to the table, right? It brings you liabilities, it brings you FX, it brings you fees, and that's why this business becomes very core to any bank, whether it is a global bank or a domestic bank. So that's kind of setting a context on, the value of transaction banking. Now, if you look at, the business as a whole, whether it is global, but I'll kind of stick to India perspective here. I think this business has undergone a phenomenal change over the last, few years. First and foremost, it is a transactional nature of business, so hence it is a very commoditized business. Right, so the products become very replicable. Of course, banks will always have the first mover advantage, depending on how agile or innovative they are. But products become replicable. Few months, a year, banks catch up. Right. So I think that becomes very critical. Hence, what is very important is that how do you differentiate? Because if everyone is offering the same product, then how do you differentiate? And hence, I think a mix of both, right? A mix of standardization, because it is transactional, needs are very simple, but customization then becomes a differentiator. Customer segmentation becomes very different, very critical, and that is pretty much how every bank has differentiated, right? I wouldn't say one bank is better than the other or so on and so forth. I think every bank, has kind of created their niches. There are some banks who are very good in capital markets, there's some which are very good in trade, there's some which are very good in payments. So I think every bank has identified their niche and, created their innovativeness, in that, and that's one part of how business has grown. I would say the increasing amount of digitization, and here I would not only say by digitization or digitalization done by the banks themselves, but the one which has been pushed by the regulator, pushed by the government in terms of the DPI which has been created, I think has absolutely transformed the way banks, have digitized their transaction banking offerings. It has also transcended down to customers, because the same customer today who's using Ola or Uber or Amazon, right, is also a treasury manager in the company or a CFO in the company. So they come to expect the same amount of ease of banking or ease of service in their banking apps also, right? So banks have also now evolved to significantly upgrade their own banking apps or banking services. We've seen a lot of banks coming out with super apps or, catering to not only banking requirements, but also beyond banking requirements. So, the whole the plethora of service which today banks offer to their customers have become more one-stop solution rather than, kind of a mix of both.
Interesting. No, I think there were 2 or 3 points that you made which stand out, and I'm going to take this to Shekhar. I mean, you're talking about granularity, you're talking about standardization and customization, and taking it, and two sides of the coin, right? And that's the question I'm going to take it to you here, Shekhar. Just as, Ajay talked about, you have different types of banks. You also talk about different segments that we're dealing with, right? From the value chain, from corporates to commercial to business banking to SMEs, and you're heading the SME function as well. So if one really has to make a differentiation to what banks take to the customer segment, and if you have to make that distinction in transaction banking, how does one go about taking that, and how does one differentiate the service from a customer standpoint?
I think when you look at the various customer segments, you will generally find moving from hundreds to thousands, thousands to million, and million to, I think, multi-Y. You may have, I think, corporates, which may be probably, I think, a few hundreds, which will be the top 500, if I were to call. You want to take it to SMEs, I think they will be generally, I think, a few million, I think, which will take it to. And when you want to take it to the real consumer, I think you will try to take it to 1 billion consumers across. And when you want to run the entire solutions, I think it has to be thought through and designed, I think, accordingly. Transaction banking has evolved, if one were to see. I think it was rightfully for corporates earlier. And corporates had, I think, I generally say, in their entire value chain, a requirement of being digital transformation is an important aspect for them. Digital ecosystem, digital leadership is something which I think the top 500 I think actually require. You come to SMEs, I think they say, I think let it be basics, simple. Can they have a digital foundation? Can they have a digital marketing? Can they have a digital reach? I think which is possible. Can they do digital sales? And if you are able to meet those requirements, you can generally say that I think you have met the transaction banking needs. And they evolve. So example, if you have I think 330 odd SMEs which are listed, actually 95 or 90 plus in the main course, I think they moved, actually migrated. You realize that I think that entire journey of moving from a small to a medium to a large also has, I think, the different context in which the needs of the customers, I think, change across. But the big part, I think, when you want to design something for them, 60 or 70% can be standardization, and there can be probably, I think, 20 odd % which has to be customized depending upon the industry, depending upon, I think, a few geographies, depending upon even, I think, a few varieties of businesses they, I think, operate in.
So you're giving, I think there is an interesting angle to 60-70% standardized, but you do have 30-40% more specific to the segment, to the geography, to the type of SME or corporate the institution is. But I quite like the fact that it is not just about a value chain, but also a continuous journey that the institution goes through, and the bank is traveling through that journey, right? And keeping it simple is critical in an SME context. But there's another point that was mentioned earlier, Vasu, and I'm going to take that point to you, which is Ajay's comment also about the digital public infrastructure and what the government has actually been doing to drive, let's say, the digital infrastructure, right? And we are talking about creating digital ecosystems, and transaction banking sits right in the middle of what could be a successful, sustained digital ecosystem, right? So if I was to ask you how the emergence of digital ecosystem specifically has actually transformed transaction banking, should I say, in the last 5 years, and your views on how that journey is going to be.
Thanks, Ram. First of all, thanks for inviting me for this panel. As Ajay spoke, then Shekhar also touched upon many things: automation, digitization, customization, and all that. Transaction banking has, over the years actually evolved, right? When we all started our banking career, it was completely manual in nature, right? The need for integration, automation, all started then. So the first phase was bank within their banking system, how to automate more and more processes, make it more digital, make it more automated, so that the delivery becomes much more faster and easier for the bank as well as for the customer. So that is the starting phase of automation, digitization in the transaction banking. As the name suggests, transaction banking, it involves volumes. As the economy grows, our customers were becoming much more robust and they are competing in the international markets. There's a need to be much more faster in their execution, and delivery becomes very important. And transaction banking, the whole set of things, right, plays a bigger role when it comes to international trade. So from corporate perspective, the need arises how, with the limited set of, resources, how to extract more, right? So that actually created the need for banks to look at different ways of thinking on the delivery. So banking ultimately is a service, right? And we are in between. We are the intermediary, play what we on the whole ecosystem. When it comes to that, when we start building up, internal systems are addressed by automated. Client needs are changing. First need is that how do we integrate between the bank system and the client system? That is the first level of integration which started. Then evolved over a period, telecom, which is a big boom which happened in the country, right? That's a time how to deliver much more efficient way to the client, the cash management needs of the client, considering the fact that the length and breadth of the country, how to cover it, right? Especially banks like us on the MNC space, we only have limited banking or branch licenses. How to be more effective, how to deliver it much more effective and efficient way, that came a need for tie-ups. Then that was the starting phase when banks started tying up with another bank to create an atmosphere or to create a need and to service the client on a pan-India basis. That was the first level of integration between organizations happened. Then came the need for tying up with the technology players, fintech companies, right? Many other, as you mentioned, the players in the ecosystem. How to get everyone together to deliver the services to the clients. So that on the transaction banking, again, integration perspective, as I mentioned, the need actually started much earlier, maybe 25, 30 years ago. That was the starting point. Then over a period, only the players kept on moving or increasing it. Bank tying up with the banks, then NBFCs, then came the fintech players, then came other partners to the system. So integration is very important when we are delivering the transaction
So
banking.
players have changed, the transaction banking remained, but the whole process has been an evolution. So 101 on how the whole evolution has been in the last, let's say, 10 years. You wanted to say something, Ajay? Go ahead.
See, the other part of, the corporate ecosystem itself, right? So again, transaction banking earlier used to be how the bank used to service their customer, manage their AR, their APs. But over a period of time, I think what the evolution has happened is it is no longer about only catering to your customer. It is also about follow the money. So how do you cater to also help the customer manage the requirements of their payables, of their receivables.
Through the value chain, yeah.
Exactly. So the entire corporate value ecosystem tying up is really where the value of transaction banking now evolves, because see, more and often the main anchor has become hugely efficient.
Correct.
Right? So if you only focus on that, your ability to extract value becomes very limited, right? But if you actually capture the supply side, the sales side, the value which you can bring to yourself and also to the customer, you're tightly decoupled with their supply chain. And I'm not saying financing, right? I'm saying supply chain.
Got it.
Financing will follow. But now, if they're receiving money from their customers, it's a B2B2C approach, right? If you're receiving money from the customers, you are helping the customers pay to the corporate. If you're helping the payable of the customer, you're also getting the account of the vendor. So you manage the receivable side, you manage the payable side, you capture the whole ecosystem, and then your ability to lend. Because, more cash flow based lending, right? It also changes your behavior to lend. Because traditionally banks have looked at collateral based lending, balance sheet based lending, right? Now you can actually look at cash flow based lending. So no longer the propensity to only look at security, but your cash flows become the security. So I think the transaction banking transcends now the whole corporate ecosystem, rather than only focusing on the
customer.
It's
no longer, you're not dealing with an individual institution, you're dealing with the whole ecosystem and the value chain there, right?
And it's not only physical, right? The whole digital apps of the banks now is actually tuned to how do I capture that ecosystem, how do I give the full view to the corporate of the buy side and the sell side in one dashboard.
And that's actually what I'm going to take to you, Hari. And there is, in fact, the earlier panel actually, Rajiv made a mention that he wouldn't call fintechs as fintechs, he sees them as fin service players, right? And that's probably what Ajay is alluding to here, that if you actually were to deal with this as an ecosystem, then technology firms actually are an integral part of the ecosystem, and that's a very strong, let's say, enabler to this success of this model, right? So if I was to ask you, how do you see, quote unquote, fintech partnerships actually contributing to this digital value chain, and specifically more so for transaction banking? Yeah.
Thank you, Ram. I think the fundamental thing is where the fintechs come from. That fintechs come from a visionary technology leader who gets backed up by significant capital right up front. So the purpose of that capital is to really acquire customers, number one. And once it comes to scale, then the question of bottom line is asked. That's a fundamental shift or fundamentally different way of looking at deployment of capital or capital allocation as compared to what banks do, right? So the fundamental, when you look at it from that standpoint, the fintechs have created what is needed for the channel and the reach that Shekhar was talking about. And also, when Ajay mentioned that it's about capturing the ecosystem. And to capture the ecosystem across the board, across multiple players, whether it's an anchor, whether it's a supplier to the anchor from the supply chain standpoint, or from the dealer side, from a corporate standpoint. If you want to look at that entire thing in totality, it's only possible when the entire chain is digitized in a native fashion. When I say a native fashion, what I mean is, I think the question is shifting from the question that Ajay said, how do we service a customer, to how does a customer want to be serviced, and can I be the bank of choice or the institution of choice that this particular customer will come to, because I service the customer, have the capability, and I'm able to service the customer very uniquely, lot more uniquely, based on where that person is. Whether it's an SME, you talked about, cash flow management. In the cash flow process, if you know that yesterday, this is the amount of cash that's come in, this is the amount of cash that's gone out, and this is the balance I have. For tomorrow, I'll need Y. Can I put that right there? That somebody was talking about, a simple thing like a truck driver who starts a trip from, say, Delhi to Mumbai, he knows that he needs, say, 3,000 rupees for the trip, right? When he comes to the first, he fills up maybe for whatever, for 6,000 rupees. And when he comes to the first filling point, at that time, within a few minutes before that, if in his digital wallet is filled by the next 1,000 rupees he needs to fill up there. That is, real-time lending in a lot of ways. And you're really reducing his cost of borrowing, putting the money where it requires, and the moment the money is paid to him at the end of the trip, that gets reimbursed back. So you're able to do that when you have, we will talk about AI, I'm sure no conversation is complete today without AI. When the entire supply chain, when the value chain is digital, and there is a automated process which is driven by AI, let's say, that supervises the whole thing, all this can happen in real time. So this is where I think, in coming back to the fintech partnerships, I think the first step towards where banking will be taken to, whether you like it or not, in the future. And the partnerships, like I think it was talked about in the previous panel, the fintechs are becoming financial service companies. Today I checked, there are about 250 nearly neobanks globally. And if you look at the major ones like Starling in the UK, or VBank in China, or MeBank in Latin America, the kind of scale they are reaching, they are significant. The time in which they have reached, let's say, I understand VBank today has about 400 million customers, and the time they've taken to reach that is in a few years, 2 or 3, 4 years, compared to, let's say, a traditional bank that's globally spread physically, having a customer is maybe 10% or 20% of that.
So it's a reach that you see the tech players.
It's a massive difference. So I think there is and the cost of
Cost of
reaching
servicing.
the number that, Shekhar was talking about, that 10 million to 100 million, how it's going, right? And if you were to service the 400 million plus Gen Z plus millennials, whatever way you want to call them, who want to come in, they're not going to be permitted to be, they're not going to permit a bank to service them any different way than the way the fintechs are able to do it today.
I think it also goes back to the point you made earlier, Hari, that, it's not about what the customer is seeking from you, but what you could actually do to address that one specific point. And it also marries with what Shekhar was mentioning earlier as being niche. It's not that you could do everything for everybody, but being able to take that one thing that specific customer could actually get from you. Well, I'm actually going to be taking to the second round of this discussion, and I'm going to ask the same question to all the four panelists. And as I promised you, Hari, we'll start with you and we'll go the other way around.
Thank you.
And the question is this, right? And the question is, what is the one change or one trend that you see that will be happening, the most defining one trend that you would see that transaction banking world is likely to see in the next 3 to 4 to 5 years?
I wish I could be that accurate in looking at a crystal ball, but I can say 2 or 3 things, and I think
I've been forewarned, Hari, that
I won't say all of it.
Everybody has to have their chance.
Okay, fine. Okay. So I think the one thing, if I'm going to say that, if I look at, you're saying 10 years. You said
5 years. 10 is too long. I have been also forewarned that you can't use 10 as a number.
Yeah, somewhere if I look at the next 5 to 10 years, I think fundamentally there'll only be neobanks, if I can put it simply, right? So a bank CEO, today, a bank CEO is called tech savvy. They understand technology, and they actually talk to us about some of the things that we haven't talked about, and we learn from them, and every time we interact with them. And any tech product today, any product for banking industry has been built practically in partnership with an institution that has taken it up front and built. That's what's happened. That will shift. So essentially, it's a technology leader who is banking savvy, who understands the risk elements, who understands the compliance requirements, the regulatory elements, again built by tech, built through tech, integrating with the regulatory, which is tech-based, that will make a bank look like what a neobank. I'm saying over a period of time, the traditional idea of banking will start to recede as the digital way of banking becomes mainstream.
So from fintechs, we'll have tech fins, essentially.
You can say that. The tech banks, or rather the neo-banks, will look at, can we partner with some banks for some purpose, the traditional bank, the other way around. Yeah.
Thank you, Hari. Shekhar, if I can take that question to you, the one most defining trend you foresee to see in transaction banking?
I generally feel that I think the entire interaction will move from, earlier it was human, then it is getting transformed to tech. I think you'll have to move towards, HCI, which is called human-computer interaction. You will feel the need of a human interaction when you want to do, the transactions in future, given the way the evolution of people's mind and the advanced research, which is happening at Stanford, actually collaborates. And in my mind, people will have money, people may not have people to speak to. And if people don't have people to speak to, you would require something more. We say, first we follow the money, then we, manage the money, and thereafter, you try to manage, your customer and be with the customer more on the emotional side rather than only the money side.
If we just add one little bit to that, the whole idea is when the entire thing is digital, right? You mentioned the customer, the entire control is in the customer's hands. So it's about how you really relate to them, and that completes the entire process. We're absolutely right.
But I quite love the way you just put it there, Shekhar. So we're going to have HCI, and it's actually from follow the money to manage the money to managing emotions. I really wish that every time we meet here as a panel, I get to speak with real people here. All right, so I'm going to take that question to you, Vasu. So I know you actually, to be honest, you gave us a 101 on how transaction banking was maybe 20 years back to 10 years back to 5 years back to today. But I want to ask you, do some crystal gazing for us and say how it is going to be 5 years from now with the one most defining trend.
Ram, I would think banks are expected to think beyond banking. That's what is emerging, is that I think one trend which I'm seeing is happening again, thinking beyond banking. How do we add more to the client needs, right? From coming to that, what I'm saying is the huge amount of data which is available within the banking system, right? Similarly, there's huge amount of data is available in the public domain. How do we marry these two and build up something which is important for the client from building up their strategy, right? Business strategy. I think that is where now some of the work is going on, the global space, using data much more, what is available within the banking system, what is in the public domain, use both and come out with something which is useful for the clients to use for their strategy.
It's a fascinating point. I mean, honestly, the insights that actually are sitting there for us to just harness and actually bring out to the table, right? So before I open up for the audience, Ajay, your view on what the most defining trend that transaction banking is likely to see?
See, I think, the transaction banking, the bank's transaction banking books itself has started seeing a shift from the bank's balance sheet to a bit of fintech plus NBFC balance sheet, right? Regulated, unregulated entity balance sheet. I think this shift will only aggravate, over, I think the next, and I'm not even thinking 10 years, as I said, to me, it's a 2-year to 3-year horizon at max, because things are changing so rapidly between that, right? So this shift will, I think, will continue. APIfication of banking, of transaction banking, is going to continue. And that is going to lead to a fundamental shift in the way that banks render themselves to customers, right? Originate digital, manage digital, transact digital, review digital. All of that is going to be, I think, fundamental. Banking as a platform and banking as a service, I think, is going to define transaction banking, right? You rendering banking and beyond banking to customers, and you tying up with others and rendering through their platform is also going to happen. I'm telling you, this is, and we are already seeing it, right? A large part of our business today actually is already on these models, and I see that this is going to be probably democratized towards all the banks over the next 2 to 3 years.
So APIfication is essentially it's a marketplace banking today.
Absolutely.
Yeah. And
Marketplace and super app, I think, is the way.
Both ways. I mean, you are banking as a partner.
Which is why I said both banking as a platform and banking as a service is going to be the next 2 to 3 years of transaction banking, and not consumer. See, consumer, we've already seen that happen.
Got it.
But purely business, I think, is where the shift is happening right
Got it. Well, I have time for one question. If there are any questions from the audience, I see a lady there.
My name is Anjali Tarapur from HDFC Bank. To the 3 bankers, I'd just like to know, how do you see between bank lending and the growing private credit market? What kind of interplay do you see? And the reason why I ask this is because it's really the mid-corporates that need the funding. Banks are rightly risk averse. And this morning, Miki Doshi made a very interesting statement that the new mandate was to earn fees, retain the relationship, but not necessarily use the balance sheet of the bank. And just one question to Mr. Padmanabhan. The RBI governor recently said that banks need to explain the logic or the model behind their Gen AI models. So how do banks really look at this aspect? Thank you.
You want to take that, Ajay?
Yeah. So the first part, I already alluded when I spoke about the future, I already alluded that banks' balance sheet has already started seeing this shift between lending on the bank's books, gravitating towards moving to alternate source of lending, which includes private credit as well. I think this is a trend which is not going to change. It is only going to aggravate more. So banks will have to change the way they look at lending. As I told you, we have to move away more and more from traditional way of collateralized or secured lending to more cash flow based lending, which is what these companies do, right? They look at the supply chain, they look at the money movement between that, they look at alternate surrogate way of assessing credit, and that's how they assess a credit, which is more and more what banks will also need to do. So I think this synergy between adopting surrogate way of looking at credit has to be something which the banks will have to imbibe and look at that.
And you see that happening more and
definitely more and more. And also I think I had to add to it, embedded lending also is something which banks will have to now imbibe within the scope of transaction banking.
In fact, there is some discussions on embedded lending this afternoon, I understand. I saw one more hand up there, so I can take that question. Yes.
I think I'll just add one
Please
thing,
go ahead,
I think, to that. I think government is doing a significant work in ensuring that I think it moves to the respective value chain very well, besides what is happening on data, what is happening on technology, and the way I think the entire machine learning and AI is helping you to lend. We as an institution, I think I can tell you that if you have enough capital, I think it is a customer, I think when it is justified, I think you'll be very happy to lend whatever is required. Yes, we heard Mickey. I think the preferences will be very different. And if you are in India and you are wanting, I think it's an economy which is going to go from 3.5 trillion to 5 to 10. And then when that is going to happen, I think you'll require lending as an important tool to the right people. I think the most important enabler. Sorry.
So you're asking about the model, right? So essentially, when you're building a AI tool for a purpose, when you're looking at the bank, it's more specific. It is generative AI in a sense that you use a general purpose AI tool to start with, but you write code. You write Python code typically to really put in the logic of and data model. You need a data model fundamentally. So what are you trying to achieve? Like if you're doing a credit assessment model, you look at what is your past data with respect to what are the kinds of customers who have been, say, accepted or rejected. Both they can be gold, right? And then you look at what can I do to lend it to a larger number of people in the segment I'm addressing. It's a question that we are answering through a model we're building currently. So I can specifically talk about that. So the construct of that model is very clear. So only with that construct do you start to build the specific application you want to do with any GenAI base that you start with. It's a different matter in the future when you have GenAI working on the cloud. I would imagine that some time from now, whether it's 5, 10, 20 years, it will be difficult to predict. All banks will be on the cloud. Powered by quantum computing based AI powering the entire process. So when that happens, when quantum is sitting at the back, 5G or 6G or 7G at that point, latency is gone, everything is at the edge, all the computing happens at the edge. Then the entire game changes. When the entire process is being looked at by a mechanism, which is people talk about 30, 40 years of experience in their lives. And the cumulative of that, maybe 220 people, 30 people, 40 people, form the think tank of a bank.
That's
Imagine that
Hari.
think tank being taken by many hundreds in
if all the banks are on the cloud, then you will have money raining here. All right. You could see all the bankers are so keen to answer. It tells you how important this customer is. Please go ahead.
One more point is that I happened to attend another forum last week which is attended by RBI and other people. This came up actually for discussion where the pace at which the TREDS platform is growing, the volumes, few players will not be able to meet the entire requirement. That requires beyond banks, NBFCs, many players to get into that, to come to the ecosystem, to lend to those suppliers and buyers in that platform. So that addresses your point is that it requires much more players to support the ecosystem in the financing.
I think it's a journey that we are already on the path of, right? So one question there, please. Go ahead.
Yeah, hi. My name is Ram Ramdas. I'm founder of Wonderland Hubs.
Can you hold the mic closer to yourself, please? Thank you.
Sure. Yeah. I didn't explicitly hear the whole supply chain finance, the domain as central to this discussion. There are, I think, about 14 million registered GST registered MSMEs. There are probably 40-50 million other registered MSMEs under Udyam and so on. But MSME lending seems to be for most banks and financiers a separate vertical. Do any of you or all of you see supply chain finance in a completely different model as maybe the next wave of transaction banking?
Shekhar?
Can I?
So I think if you were to see 60 odd million SMEs all across, and supply chain has been a primary thing probably 10 years back. It has become prominent 5 years back. It has become excelled significantly in the current arena, and it is becoming a significant tool with all the datas, I think, which I think one is able to access to. Does it become the bedrock for moving forward? Answer is definitely yes. But has it also, I think, given that 12 to 14% CAGR, which the entire I think MSMEs have had, I think I'll attribute a lot to the supply chain finance, I think equally well. For going further, I think if you say, I think 30% of India's GDP is, I think then this is from the SMEs. I think with supply chain focus as well as the industry and the trading focus, I think which will come in, I think it will rise to on an average what happens in US. I think US, I think the number is exceeding 56-57%.
That's right.
And that's the gap, I think, which India has to fill to move to, I think, 10 trillion economy.
That's a fascinating point, yeah. So you see clearly that the SME contribution to GDP in itself actually, almost doubling up just by actually having this supply chain finance. Thanks for that question, Ram.
And I think digitization will only further, be the acceleration for this, right? Because earlier, again, supply chain used to be very manually, again, balance sheet driven and all that, right? But now more and more, it is becoming digitally oriented, and the way that you assess the customers, whether by calling the GSTN or by calling the e-invoicing, the whole model by which the dealer or vendor is assessed, and the limits are given. I think the scale and the speed both has significantly accelerated.
It's a non-existent market that suddenly is opened up because you have data as a fuel.
And most of the origination for banks from the SME, MSME space is happening on the back of supply chain financing. So you mainstream the dealer vendors, and that adds to your bank's balance sheet.
Got it. Well, I'll have to let the panelists answer your questions over the next coffee break, maybe, and I may have to call this, draw the curtains here, but may I take this opportunity again to thank you, Hari, Shekhar, Vasu, and Ajay. It was wonderful having this conversation. Thank you.